Okay guys, so good morning, Wednesday 20th of June, coming at you from the Amplify trading floor here. We're going to cover in the morning briefing, we're going to talk, well inevitably we're going to talk Trump and trade wars, just get an update on the latest and have a look into the end of the week really and see how markets might continue to be influenced by this story. We'll talk about OPEC and indeed non-OPEC producers, and big end to the week there as well with the OPEC meeting on Friday. We have then Saudi and Russia meeting on Saturday, and this is key when it comes to discovering what they intend to do with production levels, and this is going to have an important effect on the price of energy. So we'll talk about that, and then we'll have a look around the charts, of course, and see what's going on. Look at some of the key technicals. We've had some pretty interesting movement over the last few days. So that's the plan of action for the briefing. If we just hit the charts here. Firstly, let's start with the equity space and let's talk Trump and tariffs, because it's been a pretty interesting well, let's just say 24, 30 hours, let's call it, because you've got a huge kind of V-shaped situation here on the S&P 500, where we had steep downside in the Asian session yesterday, so the 19th of June Asian session, big downside off the back of Trump mouthing off, I guess is the best way to call it, the best way to describe it. That's kind of his style, where he kind of, very sort of bullying tactics, where he threatened to up the ante. And of course you'll all know about this. This is yesterday's news. This is where he's threatening to add more tariffs to $200 billion worth of Chinese imports. Of course, let's just step back, because we have tariffs in place on, well, up to $50 billion of Chinese imports at this point, with the tariff rate at 25%. But of course now China are threatening to retaliate, and Trump is now threatening to retaliate because China are retaliating. But then of course China are most likely going to threaten to retaliate because the US have threatened to retaliate because China threatened to retaliate. And you can kind of see where this goes. So this is what we call the trade war of words at the moment. And the risk, of course, is whether it actually ends up in tariffs being delivered. Now, with Trump's threat, we just had a comment. What Russia's energy minister he says he's ready to talk about all OPEC proposals. Oh, correct. Sorry, hang on. What comment are you talking about, Anne?
China said they want to follow dialogue.
Okay, so China, sorry, there has been a latest comment just on this as I'm talking about it. China are saying they're open to dialogue. So maybe China aren't going to retaliate on Trump's retaliation because they're retaliating. Hopefully you're all up to speed. So, but look, let's step back, because look, I would say, and I was talking to the new group, the group of 1 week trainees we got on the floor this week, and we were talking about this yesterday morning, and we were looking at the size of this move. And let me get Ant's pointer tool out here. This is the size of that move in the oval there. During the Asian session yesterday, and check out the size of it. 2780 down to 2735. That's a full 45-point sell-off, because Trump tweeted something about threatening $200 billion, more tariffs. And I was thinking, well, all right. I mean, that's quite typical of Trump in terms of his style. It doesn't actually mean it's going to end up happening. And anyway, of course, with these threats, we'd be at least 3 months away from actually these tariffs being delivered. And of course, he's talking about 10% tariffs on this extra $200 billion. We'd be 3 months away from that anyway, because he's using this sort of strategy of having a public consultation period. This is where he's consulting the US public, trying to find products that he can increase the price on that's not going to annoy his electorate, basically, and make their lives or the cost of living for them more expensive. So, I mean, these comments that he says, it's not like immediately tariffs are implemented. It's a threat, it's a negotiation tactic. Whether it ends up actually leading to tariffs or not, I mean, obviously we don't know yet. China's comment here, perhaps throws a bit more water on this fire. So China prefers dialogue in settling trade disputes. So of course that's encouraging, but I would have said the big sell-off in this circle I've drawn was way overdone based on the actual development that occurred. And of course yesterday's session was all about retracing that sell-off, and here we are now. We're almost right back to the top. I've got a line up here at 27.80, which is the high point we had on Monday into the close, and that's the kind of target here on the upside to fully retrace the Trump $200 billion tariff threat. Okay, so I'd expect that to happen. Certainly China's comment here is going to help, but I guess you could say there's no smoke without fire. I mean, if we kind of step back a little bit here in terms of how is this market performing more medium term, and what you've got to realize is, and let me just adjust some lines here, is I'm going to get rid of that ellipse I drew there, because yesterday we kind of plummeted and that sell-off, and I'm going to actually move that line to there because it was the double top from May, I think, that kind of in the end halted what was a pretty steep decline, very roughly. I mean, we went below it briefly, but obviously a very strong rebound, recovered 3/4 of the sell-off just yesterday, and we've added to that recovery today. So on the medium term, we're still at the top of an uptrend here. Yes, if I zoom back touch, you can see the all-time high. So we're nowhere near we're not quite at the all-time high set back at the end of January, of course, but we're at the top of a 2.5 month uptrend. And, these corrections are, inevitable now that we're back up around those high points from March. I mean, is it right to say this market should be back up at the all-time January high? I mean, I'd probably say no to that. I'd say there's too many risks. The Fed have been more hawkish. Don't forget, we got the dollar trading at 11-month high. That's going to hurt a lot of these sort of US multinationals that are packed into this index. And obviously there's geopolitical risk, which, all right, has been on the back burner for the last few days, weeks, and it's of course been more about Trump and trade wars. That's been the topical issue. But in the end, you would assume there's going to be some kind of agreement made. So we're at the top end of this 2.5 month range, and further upside, I would say at this point, it's got to be limited, even with China saying that they prefer dialogue rather than threat of retaliation followed by counter threat of retaliation and that kind of nonsense. So I think that the equity space in the US is looking pretty full valued. And if you look on a shorter time period, we've actually got a bit of a downward trend situation shaping here. And if I draw this very rough, oops, hang on. Let me see if I can actually draw a trend line here. That's a rubbish trend line. Let me do that again. Let me hang on a second. I've lost my ability to draw. I don't know why I can't delete that one. Anyway, you get the idea. I'll just leave it where it is. Of course, these trend lines, you need to try and reasonably accurately line up these tops, the peaks of the waves as you're drawing it. I failed to do that, but you get the idea. We've got a downward trending situation here, and where we're trading right now this morning is actually right up on this trend line area. So we do have trend line resistance, and if I'm right, and of course I may not be, but if I'm right in saying that for now this equity market perhaps doesn't quite have the reason to move much higher, well then this is quite a good first test here for today's session in terms of resistance. It's trend line resistance looking back over the last week. We've got other levels, of course. Yesterday's high for a full retracement of that Trump tariff comment. We've then got the highs if you go back and just pick out the peaks of the waves, of course. So you've got plenty of resistance here on the upside. So, first test here with this trend line. And let's see how things pan out. Now, with regards to the other thing, put it into context, how much damage would these tariffs actually cause from a GDP growth point of view? If Trump, in 3 months' time, the negotiations break down again, no deal can be agreed on, and all right, Trump goes ahead and says, all right, 200 billion more worth of goods, we're going to put a 10% tariff on those goods. You know, what would actually happen from an economic point of view? Well, Deutsche have come out with an analysis on this morning, and they've estimated that if you include already the tariffs in place, $50 billion worth at 25%, if you then add on top 10% tariff on a further 200 billion, well, then actually they're computing it as having a negative impact of the order of minus 0.2 to minus 0.3% of GDP. Okay, now, on the one hand, that sounds like absolutely nothing whatsoever. 0.2 to 0.3% when your economy's growing up in the high sixes, 6.8, 6.9%. You know, is 0.2 or 0.3, you know, anything meaningful? And you could say no, but actually when you add it up in dollar terms, 0.2 or 0.3% of an economy that is worth over $11 trillion a year, well then actually, yes, 0.2% of 11 trillion is a lot of dollars. And so whilst the percentage numbers might look quite small, it definitely has a monster sort of monetary value. That's the impact on China's economy. I'd say it's much harder to judge what happens over in the US. You know, do producers pass through higher costs to their consumer? Do consumer prices rise? Is that then inflationary? Would the Fed have to hike rates faster? Would the cost of living get more expensive to the detriment of the lower income portion of the US electorate, who are the very people that, of course, voted Trump in the first place? And don't forget, it's all about, for Trump, it's all about self-preservation. It's all about the midterm elections in November. He's going to want a strong showing. And I'd say there's no way he's going to do anything to damage his chances of a strong election result come November. So whether, obviously, though, on the flip side of that, he wants to be seen to be, you know, playing hardball with China, because that's the kind of angle and the kind of rhetoric that got him voted in the first place. So he's got a kind of delicate balancing act to play. But look, that's the trade war situation. I mean, yes, equities sold off, now they've rebounded. I mean, what happened to other asset classes? Well, I think perhaps the most interesting moves come on the dollar. Look on the daily chart for the euro dollar, for example. And big move to the downside for the dollar. This is back end of last week. Sorry, big move to the downside for the euro, back end of last week, which of course is all about the ECB event on Thursday. And then since the tariff situation has flared up this week, nothing much. We're kind of just retracing. We've retraced half of that ECB-induced sell-off from Thursday. We've got a very nice kind of double bottom situation here, just above the 115 handle. So it'll be interesting. I mean, it's difficult with this dollar. I mean, what happened as Trump kind of mentioned more tariffs? Well, actually, the dollar strengthened initially, and that's perhaps because of the angle around the fact that more tariffs might lead to more inflation, which might lead to the Fed having to, you know, actually hiking rates 2 more times this year, for example. So, but for Eurodollar, we've kind of, on the daily continuation chart here at least, we've rebounded. If we look closer term though, look on a 120-minute chart here, then, you know, this was that, if I draw my, get my ellipse tool out here, this was the kind of Trump sort of tariff comment, dollar strengthening move that took us down to test that low from the ECB sell-off from Thursday. Now things have stabilized. I mean, it's a difficult one for the dollar, this trade war risk. Yes, you could say it's inflationary, maybe positive for the dollar short term because of more rate hikes. But of course, secondary, well, it'd be bad, you know, negative for the US economy. So shouldn't that actually be negative for the US dollar? So you've got a little bit of a conflict there in terms of how the dollar might behave. But it was quite insightful to see actually initially quite a strong dollar move off that Trump tariff announcement. You know, elsewhere, I mean, I think with dollar strength, I mentioned the dollar's at an 11-month high, and the problem that asset class in terms of that situation, of course, is commodities. So what we've seen is quite a significant sort of push to the downside for commodity markets, particularly gold here. We'll talk about oil you know, for the final part of this briefing, but let me just go to a weekly chart. Wow, sorry, Ant, I'm going to tidy up your technical analysis here. I'm going to remove everything. Look, weekly chart for gold. this is starting to look quite significant. I mean, I know on this weekly chart you're thinking, well, actually, we're still up at the top end of the range pretty much, but actually, you know, we've definitely had some steep downside, break below $1,300, and actually, we're looking like this kind of multi-year trend line situation has also now been breached. I just draw a trend line there, for example. But if you go back to that low from end of 2015, you'd say, all right, messy, but upward trending market. Upward trending wedge, though, because we've definitely had you know, important resistances up just north of 1350, of course, which have capped the upside. But this year, if you zoom in, we've been very flat for the first 4 months of the year. Nice tight range between those two horizontal lines that I've just drawn. Of course, what's happened in the last 4 weeks? Key technical breaks to the downside. Number one, breaking to make a new low for 2018. This was that sell-off on the 15th of May. Just zoom in a bit on this. Then this kind of trend line came in to prop things up, and we had this wedge situation. But of course, now this dollar strength has just tipped gold to the downside. We've breached the May low. That's been the key resistance since we've broken that level. And gold's looking particularly bearish from a technical point of view. Mostly this is about dollar strength. Of course, also a hawkish Fed from last week isn't going to help gold prices. But certainly gold technically looking very bearish here. Well, let's look at, before I look at the oil chart, I mean, let's just take a look at some of the headlines. I mean, obviously, there's always Trump stuff going on. And actually, outside of the direct China US kind of argument, don't forget that Europe here are not happy. And that's because of Trump's steel and aluminium tariffs and the fact that he's going to apply them to allies as well. And so European steel producers up in arms about a 25% tariff. So obviously the G7 week or so ago, this kind of all came to a head and it flared up, and relationships between the US and the other major developed economies have dramatically turned. And here you've got news this morning about Europe trying to gather other allies. So outside of the, let's call them the G6. So the G6 plus then America make up the G7. Well, if you take the G6, they're rounding up other allies like Australia, for example, to try and form an even more powerful sort of network of global traders to try and push back and influence and I guess try and change Trump's strategy. So this is all going on. But that's enough about Trump. What about OPEC? So this is the other big event this week, of course. Now, the actual, there's a big meeting, like an international energy conference that starts in Vienna today. This is where the global energy community come together for a big meeting and a big party. So all the players are in Vienna, not just OPEC, all right, the full Monty from around the world. This then pushes forwards to actually the OPEC only meeting on Friday. This is their biannual meeting. Then, perhaps even more interestingly, we've got Saudi Arabia and Russia meeting on Saturday. Okay, and of course at the moment what we've been seeing is obviously there's speculation that OPEC are going to increase production. Okay, let me just transition to the oil chart, because that is the main reason why, if I go to a daily time frame, that's the main reason why, again, I'm just going to tidy up this chart. That's the main reason why we've seen this correction in the last, back end of May, pressure coming in last week as well, right? This sell-off here on oil, dollar strength is helping, but mostly about OPEC increasing production. But by how much? So there's been speculation and numbers flying around. For example, 1.5 million barrel a day increase. This has been floated by the Russian energy minister. So that's increasing by 1.5 million barrels a day. Now, just to be clear, that's not just OPEC. That is total supply increase, including Russia increasing production. Okay, we've had numbers flying around like Saudi Arabia would be able to contribute a very, very suspiciously specific number of 402,000 barrels a day increase, with Russia clocking in with an increase of 248,000 barrels. They're the two big ones, right? If Russia and Saudi are only going to contribute 600 850,000 barrel increase. I don't know where the other 850,000 barrels a day is going to come from, because the point is, not many countries have that much spare capacity. I mean, look here, I'm just going to make this graphic a little bigger. This is probably able to increase. Now, this is Bloomberg kind of speculating, well, how are we going to get a 1.5 million barrel a day increase in production? So 402,000 from Saudi, here's Russia, and you can go down the list, right? Who's going to be contributing? Uncertain then, well, are these guys going to contribute or not? And if so, well, how much would they contribute, and so on. It's all speculation, this. What I think is going to happen is, the problem is, I guess, look at the left-hand column of this list, because most OPEC producers actually can't increase production because they're already at maximum capacity. So the problem you've got with the OPEC meeting on Friday is it's incredibly unlikely, I think, that OPEC are going to have a broad consensus agreement to increase production. I see Friday's meeting not getting anywhere, and actually no consensus production increase decided. And the reason for that is mostly Iran, let's say, Iran versus Saudi, you know, the arch enemies across the OPEC table. And if Iran are pumping at full capacity, well, the last thing they want is Saudi to increase production, because that will mean prices go lower. So Iran just get hit by less revenue. You know, Iran can't increase production to offset a lower price to maintain revenue. So all of these OPEC countries that are pumping at full tilt, any increase in production is just straight out a negative for them from a revenue point of view, which is why it's like incredibly difficult to see how OPEC are going to reach an agreement here. So I actually expect Friday to be a bit a failed meeting and no consensus agreement. So actually then it comes down to Saturday. And look, there's news on this on Bloomberg. If you want to read about this kind of stuff, Iran rejects compromise as OPEC heads for battle in Vienna. All right. This stuff is kind of what traders have got on their radar. What I'm saying here is not brand new and controversial, the idea that OPEC aren't going to decide on a production increase. This is getting towards being consensus opinion, all right? So then it comes down to, I would say, Saturday's meeting between Russia and Saudi Arabia. And if we go back to the oil chart here, you know, ultimately go to the weekly time frame, and again, we're very high here if you look back over the last 12 months, but we're high for good reasons, in that global growth's been very solid and the demand side situation has been incredibly positive. We've had a weak dollar through this period. That has now reversed and the dollar is strong. But, you know, in the end, how much are Russia and Saudi Arabia going to increase production? And the idea it's going to be anywhere near 1.5 million barrels, I think, over... that's ambitious. So I think you're going to get an increase in production of less than 1 million barrels per day, and that actually might lead, that's definitely already priced in, I'd say, around $65. You may even get a bit of upside on price off that kind of news. Obviously, the lower the increase in production, well, the more likely that oil tracks back up to the $70 handle, and maybe, you know, the 4-year high up at almost $73 here. So definitely oil on everyone's radar as the energy conference gets underway in Vienna today. Everyone's there. You're going to get a machine gun of comments coming out of energy ministers from all over the place. So headline risk is going to ramp up to its maximum starting today, and that should feed into Friday, and then Saturday people are actually really looking for the big event. What do Russia and Saudi Arabia agree? Let's just have a look at the data calendar then for today's session. Let me transition the screenshot. It's been quite a slow one on data this week, and that is set to continue. That's normally the case. Final week of the month. You don't tend to get much tier 1 data, but that then feeds into the first week of, actually it's not the final week of the month, is it? It's the penultimate week of the month, I should say. So really the second half of any month, data sets become less significant, although we will get an update on the preliminary PMI data from Europe on Thursday. But outside of that, today it's mostly going to be about oil with the inventory data that's coming out of 3:30. Just on that, as usual, let me just get my ADP numbers here. So last night, We got the figures as usual Tuesday evening from, sorry, API, not ADP. API figures showed that crude supply dropped by just over 3 million barrels. So that's a bigger drawdown than was expected. Cushing, bigger drawdown than expected. Gasoline, build of 2 million, distillate, small build. Okay, so if we go to the oil chart, you know, how did price actually behave off the back of that API data from last night? Well, let me go to a 60-minute chart. Well, we've seen that oil has been ticking higher this morning, and last night, I mean, yeah, the actual initial reaction seemed quite modest, but we did kind of break a short-term downtrend, and we've been drifting higher this morning, mainly as a result of that bigger drawdown than expected from the API last night. Of course, it remains to be seen what the actual Department of Energy numbers look like, and they're going to be delivered to us at 3:30. Outside of that, existing home sales at 3 o'clock. Again, these days, that housing-related data in the US not massively important at this point in the economic cycle, so I doubt that's going to have much of an influence on markets. So really, it is those Department of Energy numbers that most people are looking at. We've still got this ECB annual monetary policy conference going on in Sintra, so you've still got an avalanche of monetary policy guys potentially making comments, including Powell and Draghi and Kuroda, all the big guns here speaking at the conference today. But so far, this conference has not thrown up any current or any comment about current monetary policy situation. So this needs to be on your radar. We're looking for those big guns to be speaking around about 2:30, but most likely they're not going to say anything that's going to be market sensitive, but you've definitely got to be aware that they're speaking and know what they're saying just in case. All right, if any of these lots say anything significant, then of course that can be easily the biggest moment of the whole day. But most likely, given we had a Fed meeting and an ECB meeting literally last week, they've kind of said what they wanted to say already, and therefore these kind of conferences don't tend to throw up anything majorly important, but keep it on your radar. Okay, that's probably enough for me for now. Enjoy the session, and we'll be talking in the room throughout the day. Thanks a lot.